Alrighty. I think we are going to be up and running. I'm hoping anyway. Um, Everything looks to be in place. If you're in here, give me a thumbs up if you can hear me. I'll swap over to the camera in just a second. I believe. Uh, there we go. G'day, g'day. Coop, how you doing? You can hear me, Clayton? Fantastic. How are we doing, guys? How are we today? Happy Friday. Well, for me, anyway. Happy Thursday for all American traders and European, but happy Friday to all Asia Pacific traders. Last day of the week. How we feeling? How have we been? Hi, Bob. How you going? Lovely, lovely, Murray. Thank you. Welcome, guys. Welcome in. All right, we're gonna dive through a couple different things today. A little bit different. I may even set a little bit of a challenge. Obviously, it has been a very busy week at the Fivers. Good night. Hello. Welcome. It's been a very busy week at the Fighters. I think most of you know that we've had a big announcement and a lot of moves happening. We'll touch a little bit on that, but I want to get back into the charts realistically. I know it's exciting and I know it's great that everything that's going on, but we're here to trade, so let's dive back into the charts and start getting back into analysis and talk about our trading as well. But we will touch on that as well. But we'll give it a little while. We'll let people come flooding in and then we'll have a look shortly after. How's everyone's week been? How are we feeling this week? Trading, markets wise, what's been going on? Have you made money? Have you lost money? Talk to me. What's been happening? Where have you seen the big moves? Where have you caught the moves? Have you been sitting on the sideline? Why? Let's get it going. Let's imagine this is a one-on-one analyst meeting and let's have a chat. Just while we wait for the everyone to pull in and we can have a talk. Hi Taz, welcome. Great British Pound US dollar. Yeah, I put out an analysis. Made money every day this week. Bob's on fire. Look out. Well done, Bob. Well done. In my fundamental analysis at the start of the week, Great British Pound US dollar was one of my like strong sell points. It was like hard sell the Great British Pound US dollar. Look for shorting opportunities the whole way through the week. I think we all know how that pretty much planned out. It just ran to the downside all week. So fundamental analysis really pulled through on that front. Euro US dollar was also a strong sell for me, but it kind of just ranged a little bit. We did get some big movements to the downside, but it didn't really perform. Everything realistically was US dollar based, right? The US dollar was really strong. If you look at the currency index, the DXY, and the correlation with US dollar Japanese yen breaking those real long highs. I think they're like 44-year highs or something like that. We'll have a look into that shortly. We got up above that area. Great British Pound, we managed to break below a solid demand area. We pretty much ripped through that. We sat there for a little bit, pulled in a bearish flag pattern, which I spoke about in my early analysis. And we've just run since then, and I'm going to dive into that and how that went. So, silver as well, good gold sells too. Yep. So US all correlating to the US dollar. US dollar has been strong throughout the week, which was expected, which is giving me the idea that tonight ahead of NFP, we are going to get good news for the US dollar, but I don't think it's actually going to go the way most traders are planning. I do think the reaction initially from NFP tonight, and we are forecasted a little. Well, actually, we're forecasted to sit steady at 3.5%. I do think we're going to see a lot of profit taking tonight. I'm not trading it, and I don't recommend ever trading NFP. It goes a little bit mental. But even in the event we get really good news, I am expecting to see a bit of profit taking, given that liquidity event is going to give the opportunity for our really, really big traders to be able to simply pull out of their positions and take profits, given there's so much liquidity at that time. How are you going, Massive Fish? Good to see you. Is it going to continue the US dollar strength? Personally, I do think it will continue. We may not get as strong as what we're seeing, But fundamentally, yes, I'm still. We need to wait and see what NFP is going to bring us, because if we do get some really bad news out of NFP, it might change our decision making a little bit. But look, Monday morning, I sat down and I ran through everything, and I was like, yeah, this week is begging for US dollar longs. My favorite was Great British Pound US dollar. That played out very well. Fundamental analysis, especially in a short time frame like a week, doesn't always plan out the way you want it to, but it is very nice when it does. So yes, I think the US dollar strength will continue. I'm not sure how strong, but that's going to be my Monday analysis. I'll have a look through and see what we can do. Clayton, still kind of losing, but I'm simplifying my strategy and I'm currently in a position that I'm up in. So while I'm still down, I think simplifying things will help out big time. Interesting. What's led you to the decision that simplifying it is going to be the answer? What makes you think that simplifying your strategy is going to be a good idea? Paul, how you going? US dollar, Japanese yen, and Aussie dollar, Japanese yen short. Are you talking short term or are you talking long term, my guy, Paul? What are you referring to here? Sorry, what's NFP? NFP is non-farm employment data. It's the employment rate for the US. It's probably the most volatile event in forex trading. You'll notice it comes out once a month, and it moves the market within a matter of seconds. It moves it quite a lot within a matter of seconds. So I recommend staying out of the market from about 12 hours from now. You're going to have NFP come out, and it's going to go a little bit crazy. I'll say that. Good gold sales, Murray. Awesome. I haven't really looked into the gold, the commodities at all this week. But gold's set up very similar to what pound was doing, and you can actually see the correlation in gold and pound there. Sterling has been getting stumped. Getting stumped. It's not looking great. And then obviously German stock market's on its way down, given the exceeding electricity prices that are coming through. The cost of living is going through the roof in Europe. That's going to be interesting to see how the indexes relate to that and how they're going to react from that. Euro US dollar is doing pretty much the same as what the pound was doing at the start of the week. So we may see some kind of correlation effect come in that way, but we're going to have to see. We're going to have to see how that comes out. I use a proprietary swing trade system that's 95% mechanical for a smaller portion of my trading, and I had it on Great British Pound US dollar short with a 11736 entry and a 11438 take profit. All right, let's have a look. Let me whoop over to the charts here. Have a look. So you had a 11736. So you got in around here. Maybe the pullback, I'm assuming. And a 1438. 1438. Oh, okay. We're not down to your take profit yet. Right, okay. Yeah, pound was a very simple one, right? US dollar strength, real good. Great British Pound, sterling, real bad. Very simple outlooks for the week. If you've got one currency who's looking really good and you've got one currency who's looking really bad, we're not going to be sitting on that weight scale very well. We're going to be very tilted. All right, same thing we were with this. We were very tilted. So for the whole week, pretty much, I was looking for shorts on Great British Pound US dollar. And as you can see, any entry points I would have had looking for shorts, whether it be day trading, whether it be swing trading, quite successful. And then on top of that, we did get a nice kind of bearish flag pattern and a very strong breakout to the downside. That was on Friday. And last Friday, we did have some big news come out on Friday. I think it was the Jackson Hole gnosis. Can't remember exactly what the news was, but we did receive big news on Friday, which is what that big market move there. But it did also coincide with technical analysis, which ran quite well. Well, I was using a lot of fractal confirmations when trying to find trades, but it's hard to watch and try to find good setups. So I'm trading higher time frames so I can plan out entries easier. Okay, makes sense, right? But always make sure with any decision you make like that, when simplifying or altering your strategy, make sure you have the data to back up that that's the right decision. So in a circumstance like yours there, what you would want to be doing is back testing your current strategy or all the forward test, everything you've used, swap that over and back test what you want to change it to, or forward test what you want to change it to, and then compare the two data, and then you'll get the obvious, one's going to be better than the other, and you'll understand whether you're actually taking a step back or whether you're taking a step forward. A lot of people are very quick to alter their strategy. I'm not saying you're doing this now, Clayton. I'm just rationalizing. A lot of people are very quick to change or alter their strategy based off of how they recently feel about it, and 9 times out of 10, it's actually a bad decision. There's no data behind the decision. There's no emphasis on why it should be done. It's just based on gut feel. 9 times out of 10, that gut feel is actually telling you to do the wrong thing. You're just seeing something else in the market right now. So all I'm kind of saying, Clayton, is make sure you've done your due diligence. If you have, fantastic, and you know it's the right decision, fantastic, awesome. If you're listening to me now and you're going, oh, maybe I didn't do that, highly recommend just stopping, have a look at it, dive into it, and ensure that it is the right decision and it is going to help you in the long run. Correct, it had Great British Pound, Aussie dollar, and Great British Pound CAD shorts also. Yeah, the Aussie dollar was looking strong, but it's just no match. Oops. It is no match for the US dollar right now. Not much is really a match for the US dollar right now, if I'm honest. I do like the Aussie dollar strength, and I am biased for Aussie dollar strength. I just wouldn't really pair it against the US dollar. Something like the Aussie dollar Japanese yen, sure. Aussie dollar Swiss franc, I reckon you could probably look for some longs. It sits very nicely. It's very slow, but I reckon we could probably move up maybe next week. I need to dive into everything next week and have a look at how we're feeling about that. But overall, I've been bullish Aussie dollar for a while, right? I've been bullish Aussie dollar for a while, but yeah, I can't fathom why most people are shorting it. I'm assuming it's the big correlation with China, because data wise we're doing pretty well. Nowhere near as well or got the volume as US dollar, which is why you're going to see Aussie dollar, US dollar go down if US dollar strength is still there. That's just going to happen, and then it correlates throughout charts and whatnot. Aussie 200 down, but so is the S&P 500, so is the German 30, so is the UK 100. 10-year bonds are on the way up, which means people, outlook may be a little bit better over the next 10 years, people getting back in it. S&P minis are down. Dow Jones, yeah, look, it's all stock markets across the way are kind of getting stumped over the past week, which is where we're actually getting even more strength into the US dollar because it's coming out of the S&P 500. Hi, Lucian. Good to see you, mate. I hope you're well. Shane, you made money, lost money down on the week, various trades I took require better psychology from me to hold the trade. Interesting. Closed them out early. Very well. Same thing, Shane. Look, emotion in trading that way, it's difficult. It's tough. It is a little bit harder to know when you should be taking profits, when you shouldn't be taking profits. But same thing with Clayton. You just got to have the data to back it up. Have the data to back up the decisions you make are going to be the right decisions for you, and you'll be able to run it that way. Aussie dollar, US dollar looks like a big head and shoulders that broke the neckline. What time frame are you looking at here? You're looking like real big? Yeah, you're looking real big. I see it, but necklines, especially in head and shoulders, necklines can be quite flexible on where they are. I understand what you're looking at. You're looking at a shoulder here, head here, shoulder here. However, it must be noted that we are also still in a downtrend. So, look, realistically, we probably could come down around here. I don't think we will. We may be able to break these lows, but I don't think we're going to get down to 6.6, 6.7. Maybe, but yeah, it'll be something that we have to keep an eye on. Good morning, Chris. Good morning. It's good to see. Good morning. Hang on. Good morning. You're in Asia Pacific. Where are you from, Chris? Or are you just saying good morning to me? Happy to be here, Geordie. Hope you're well too. I'm very well, Lucian. It's good to see you, mate. It's been a hot minute. But it is good to see you. Fora, yep, I know. Not inverse head and shoulders. Looking for a double bottom to cover. What do you mean? Not. Oh, what? Are you looking? Right. Okay. Sorry. Are you looking like shoulder here, head here, shoulder here, broken? That is that what you're talking about? Sorry. Does? Just from Sydney. Sydney. Beautiful Sydney. Yeah. Right. Okay. Sorry. I thought you were looking at the inverse one. Um. Yeah. I can see it. I can see it. There's no conviction. And I'm not sure how. Yeah, it's tough, right? Because I don't like. I'm very bullish Aussie dollar, but I'm very bullish US dollar. So I'm sitting in that spectrum of I'm just not going to touch the Aussie dollar US dollar chart because I'm bullish on both pairs. I do think the bullish strength US dollar will be better and stronger. Therefore, we probably will see downside in the Aussie dollar US dollar, but not having that fundamental bias to actually short the Aussie dollar, um, I'm just not loving it. I believe next week. I think it's next week. We have our cash rate. Yep. Expected another hike, another 0.5 basis points, another interest rate hike in the Aussie dollar. So it'll be interesting to see how the market reacts to interest rates. And then when does our CPI come? We get GDP. Oof, it's a big week for the Aussie dollar next week. It is a big week for the Aussie dollar next week. Keep an eye on that. I'm in the process of trying out the strategy for 20 trades to collect some data. I've always back testing, excited to see what the results are. Journaling that's helped a lot recently. Awesome, Clayton. I reckon go 50. 20 trades is not a lot of data, unfortunately. Just from personal opinion, aim for like 50 to 100 at least to actually base some decisions off of it. More data, the better. 20 trades, not great. Like, let's say I have a day trading system, right? And I take 4 trades a day, it means that 20 trades of data is over 1 week. And we've seen how different weeks have different volatility, different announcements, everything like that. Definitely recommend aiming a lot more trades than just 20 in a test. Gotcha, do 50 to 100, fantastic. Look, if you have the energy, go even further. If you're liking what you're seeing, go even further. If you're not liking what you're seeing, go even further because the strategy you're testing may have just been in a drawdown over the past month. So if you base all of your trades off of the past month's data, it's going to be negative. So you can kind of push it back a little bit further. I'm getting a spam message. You're kidding. In a live chat for stream. That's just impressive, my guy. Interesting. Anyway, yeah, 50 to 100. Highly recommend that. Highly recommend. There's no way I can actually delete that, is it? Jordy, did you guys discuss Great British Pound US dollar? Yes, we sure did. I just wanted to know your opinion about the weekly level, which was touched in 2016, 2019, and 2020. Seems to be a kind of 3 year cycle. So, Lucian, just to run you in so we don't double up too much. Great British Pound US dollar, my analysis early week was short. Again, short the Great British Pound. I'm very bearish sterling, very bullish US dollar. That's what we were looking at. Anyone over on TradingView, please just ignore that message. It's a spam. Don't go do what he's trying to do. Some reason I can't delete messages as a stream host, which is beyond baffling to me. But please don't go do what he's telling you to do. It sounds like a one-way trip to lose all of your money. So just a quick disclaimer: don't do what that guy's telling you to do. Back to Lucian. Yes, so I was short all week. On the Great British Pound US dollar, it's very bullish US dollar, very bearish sterling. You're looking way back, so let's jump over on the daily chart. You're looking at these levels, right? Yeah. So obviously we you're looking at this whole area here, and we've kind of been sitting in a range, right? We've been sitting in this range here. Now, I'm not one for really doing long-term investments in currencies. I'm not huge for doing long-term investments in currencies. I think you can get better returns doing long-term trades in equities or in indices or anything like that. I think you can get a little bit better returns. Don't get me wrong, you still can get great returns, but politics change too often for my liking, and it's just a little bit all over the shop when it comes to long-term investing. So, look, this could go either way. We could get some really great news from the pound and the US dollar start selling off. The S&P 500 to start rallying, running crazy. Definitely could happen. And then we'll stick in this range for a little bit longer. Or we could continue the way we're going. The war get even worse, spread into Britain, and everything go right the way down. So right now we are sitting in this range, and whether or not we're going to stick in this range, I don't know. I don't even have a bias, to be honest, because it's such long term. Short term, I guess it kind of does mean I have a bias. Short term, I do see more bearish power. Okay, more bearish power. And the fact that we're at the bottom of the range already, maybe we are going to break out. Maybe we are going to break out. Because short term, fundamentally, yes, I'm looking for a bearish bias. I'm looking for a bearish move. So, yeah, we'll just have to see. We'll have to see what happens. Have to see what happens, I guess. US dollar Japanese yen hits 140 for the first time since 1998. Exactly right. I also spoke about this in my morning analysis Monday, breaking above, because you know why? It is the exact same as the dollar index. You can see the correlation between Japanese yen and the dollar index. US dollar pretty much moves this pair, right? You can see the whole way. The correlation is I mean, I don't think I even have to point it out that much, right? Let's go ahead and make both of these lines. It's almost as if we're seeing the same chart. That's just the dollar index and US dollar Japanese yen. I mean, it's mostly influenced by the dollar. Sure, there's going to be some similarities in different places, but overall. And then on the dollar index, I was expecting a nice breakout of the top. You can see we kind of, sorry, because it's the correlation, we kind of broke out a little bit, sat there, and now we're running again. And the same things kind of unfolded here on the US dollar Japanese yen. We've broke out, and only just broken out, but we have broken out, and maybe starting to continue that move to the upside. We'll have to wait and see. NFP tonight, remember that. That's going to move this market. It's going to move the charts quite a lot. So keep in mind that we do have NFP data, and it is going to be a little bit crazy. Right now, early Asian session, I've already missed the opportunity. Okay, I wanted to go short. I wanted to go short early Asian session, the usual strategy that we're trading, but I've already missed it. There you go. That wick right there was the opportunity to short this stuff, and it's already gone without me. Yeah, it's already gone like 15 pips without me. Okay, so that was my trade idea of the morning gone. I got distracted. But there was my trade idea of the morning gone. Did anyone catch that? I know there's a few people that like to trade with me when I trade these morning sessions. Did anyone catch that move? I was caught up talking. Fundamentally, I'll just go with the trend until I have a reason to reconsider my bias. Thank you for going through again for me. No worries at all. German 30 is an interesting one, isn't it? Because electricity prices in Germany is going through the roof. Even funnier, look at the UK 100. So usually you see, okay, and I'm going to say usually, the correlation between stock market and currency, okay? As money comes out of the stock market, it goes into the currency. As money comes out of the currency, it goes into the stock market. You usually see some kind of correlation effect in there, okay? Looking at the pound, we've seen money flood out of the stock market and money flood out of the pound as well, which is just interesting. It's just interesting to see how that is happening. And it was something I just wanted to touch on and maybe get your brains ticking a little bit thinking about that. Why is that happening? How's that happening? And where's the money making opportunity? Where is all the money coming out of the pound and the UK stocks going? because it's coming out of both. 5ers need to enable swing trading indices. Mr. 200 daily SMA short on SPX right now, sitting in decent profits from a Nikkei short. Would like to hold over the weekend, but going to cover. Yeah, I mean, I get it, Taz. The only reason we're not holding those over the weekend indices is because of the gapping markets are quite heavy, and we've seen based on most traders' data from the firm that we have, that a lot of traders don't factor in gapping markets into their risk management processes. So when we do have that, it leaves the firm's funds massively overexposed. Once again, it's one of those circumstances where there's a select few that don't follow the process, and it correlates, and then it leaves us overexposed. So if we do have a gapping market over the weekend, we could lose a lot of money. Like, not just in your account, like let's say you have $1,000 loss, like yeah, it sucks. But now times that by like 400, right? Of other traders. The firm is overexposed to positions like that, which is why right now that we don't allow positions over the weekend. It might be something we learn to adapt with, and we learn on ways we can reduce our exposure. But that's the reason that's that way at the moment, Has. I hope that makes sense. There's always a reason behind everything we do here at the 5ers, okay? Every risk parameter, every whatever it is, there's a definitive reason behind it. We're not just putting them there to be a pain in the ass. There is most of them are purely risk management processes, and managing our exposure to the point we don't bankrupt ourselves from any whatever. We need as much funds as we can so we can fund other traders who are coming in. So yeah, I just wanted to explain that quickly for you. I hope that made sense. Welcome, Horman. No worries at all. I'm glad you're here. Welcome in. It was very nice to wake up to the nice Discord messages this morning. Thanks for that, Lucian. Thanks, Heather. Very nice. Yeah, but industry trading has been fun on the Japanese, the Nikkei index recently. I've been kind of scalping the US dollar Japanese yen. You know, I'm always like looking in the US dollar Japanese yen, but also on the Nikkei index. It's been quite fun this week to kind of scalp during the Asian sessions. You can see we kind of get some nice movements. Correlates very heavily with the S&P 500. Go ahead and show you. So we're on the 5-minute chart here, and you can see if we're moving on the Nikkei, we're moving on the S&P 500. Very similar moves. And then if we pull in something like the US dollar Japanese yen on top of that, kind of doing the opposite, right? Kind of doing the opposite. Nikkei runs up here, S&P runs up here, Japanese yen drops in here. Then we get a strong drop to the downside, strong drop to the downside, we get an upside climb. Nice, steady, go to the downside, nice, steady, go to the downside, steady to the upside. Pull up right here, a pull down right here, and then an upside again. All right, so now we're correlating. Why are we correlating? We need to change that. Is Japanese yen now going to come back down? Is the S&P 500 and the Nikkei now going to go up, or is it the other way around? I like to see the correlation between all of these things, and like to try and pick out different areas in which you should actually be analyzing to see, can you get an extra little edge in these markets by using solid correlation? Thank you. Fan club in the house? Yeah. Apparently got a little fan club. Need some water. Been talking a lot. Yeah, as a whole, that was I'm hardly looking for bloody shorting opportunities. No, there's nothing there. Let's get over to the FX pairs. Let's have a look what we've got on. Japanese yen's already gone. That was our opportunity. Nothing there, nothing there, nothing there. Ooh, maybe. $7 Japanese yen sitting in this range here. Could have an opportunity later on. Nope, 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 nope. Japanese yen's the the joy ones today, I think. Euro's just boring me recently. Crazy to say. The Euro has just been boring me. So usually with my day trading aspect, I'd go, yeah, look, we're looking for a great short opportunity in here. Sitting around this area, let's look to go long. Sorry, not short. Go long, cover or fade this big move we had yesterday. But I just don't like the Euro. Don't like the Euro. Use the JPYX to correlate? No, not very often, Paul. I use if I'm looking at trading the Japanese yen, especially during the Asian session, I'll literally use the Nikkei index as the biggest correlating factor, and then it depends on what pair I'm actually looking to trade with, including the Japanese yen. So, yeah, most of the time I trade US dollar Japanese yen, but using the Nikkei index is pretty much the same as using the S&P 500 index futures. While the Nikkei is open, they usually correlate quite well, and I think they're vice versa, right? So while the S&P is shut, excuse me, the S&P is shut, the Nikkei opens up, and then the S&P pretty much just follows what the Nikkei is doing. And then when the Nikkei closes and the S&P opens up, it's the other way around. The Nikkei futures just kind of follow whatever the S&P 500 is doing. So you can get on the Nikkei index and you can actually pre-predict movements that you're going to see over on the S&P 500. Very minusculely and very minute. You have to be very quick, but you can sometimes get a bit of an incentive. If we start moving on the Nikkei before we're actually moving on the S&P 500, you will see about 10-20 seconds later the S&P 500 will follow suit sometimes, not all the time. And then vice versa with the Japanese yen. Usually you could do the opposite. I wouldn't use it as a direct trading strategy necessarily, but you can use it for a confirmation bias. So Canadian dollar did bits last night, right? Canadian dollar moved a lot last night, and it was all US dollar news. What do we have? We're building permits. Manufacturing PMI. Ooh, missed. Wow. That missed heavily. That is not good for Canada. Canada. It missed heavily and went up. God, I love this market sometimes. Sometimes it just does not make sense, and it's lovely. Missed the manufacturing PMI hit. I'm guessing it just went up because the US manufacturing PMI hit. Did we get similar movements on the US dollar? Yeah, kind of. Yeah, it's just the correlation with the US. It's really pushed that, which is annoying, in my opinion. But it is what it is. Speaking of annoying, a US dollar Japanese yen trade would have been lovely. But Canada produces oil and oil is going up. Not wrong. Not wrong, but that doesn't necessarily mean that Canada's currency is going to improve, right? Because if we produce oil, okay, for example, I am Canada, Emmanuel, let's pretend I'm Canada, and I produce oil, okay? Well, companies inside of my country produce oil, yeah? And then the oil price has gone up. I believe it's actually coming in now, is it not? Let's say oil price has gone up. Where are we? Oh, over. I think it's on. Yeah, oil prices coming back in. Let's say oil prices have gone up, right? Who's that good for? Is it good for the company or is it good for the economy? Now, you can say both because if the company is doing well, it's good for the economy. Yes. However, if it's better for the company, first of all, then you're going to see a lot of people want to invest in the company, not necessarily in the Canadian dollar. They want to invest in the company. So if all the money is going into the stock company, that money's not going into the Canadian dollar. It's going into the shares for that company, which actually most people in Canada, if they were to invest in that, they would be exchanging their Canadian dollars for shares in that company. So they'll actually be selling the way we do in FX. They'll be selling the Canadian dollar for those shares. So while at first the correlation, you are correct in drawing that conclusion, it doesn't necessarily mean that the market's going to replicate that. It's good for Canada, yes. It doesn't necessarily mean it's going to be good for the Canadian dollar. There can be different things. Now, it can get there if jobs comes up, it pulls jobs up, it pulls the GDP up, and it does all of those things. But just the commodities price changing a little bit won't affect it all that much. And you can kind of see that correlation in the way gold moves and Aussie dollar moves. Right now, it's all just US dollar. Okay, wherever the US dollar is going, everything else is going to follow suit. The correlations are quite high. But we produce a lot of gold in Australia. Sometimes it correlates. Sometimes if gold's going up, the Aussie dollar is actually coming down, and it doesn't necessarily equate to the Aussie dollar being strong, but it does replicate later on if it creates jobs, if it creates better GDPs, if it creates economical advantages. Does that make sense? So you're right in what you pulled there. Canada produces oil, and oil prices going up. Therefore, the Canadian companies are going to be doing better. Sometimes, not necessarily. Depends what their overheads are. But that doesn't necessarily mean the Canadian dollar is going to be strong because of that. No problem at all. Happy to help. Does anyone have any charts or anything they want me to have a look through? Got through everything I really wanted to chat about quite quickly. So now you've just got me. You've got me. What do you want? What do you want to see? What do you want to talk about? I'm here for you. Let's do it. It's Friday. I'm in a good mood. Also, quick note: there won't be a live trading room next week, unfortunately. From me, there won't be a live trading room from me next week. So factor that in. Apologies, but I am, and the following week. Actually, yeah, this is our last live trading room for 2 weeks. Yep, that's right, Lucian. I'm going on holiday, so a much needed holiday. But Springboks gonna win? Ooh, absolutely not. No chance. I'm excited for the Rugby World Cup next year. To be honest, Coog, I'm getting keen for that. Obviously, we've got the Rugby League World Cup. I'm a big rugby fan. We've got a Rugby League World Cup in November, is it? I think it's November, around the same time as we have the Football World Cup. Um, Football, soccer, depending on where you're from. And then obviously we've got the Rugby Union World Cup next year, which is in Paris, I think. Is it in France? Really excited for that, eh? I'm a big rugby fan. I like rugby. Manuel wants to talk about NASDAQ 100. Interest rates are going up in the US. They sure are. They sure are, as with everywhere else. I don't have the NASDAQ index on there. The NASDAQ? Tech companies. Tech companies are usually the ones that get especially like the unprofitable tech companies are usually the ones that just get absolutely stumped during a time of fear, inflation going up, whatnot. Unprofitable tech companies are usually the ones that just go, see you later, I don't want to hold you. Which means, I've discussed this for weeks and weeks, it does mean we get a little bit cheaper, they're on sale, right? If you like a tech company, they're not quite profitable yet, but you really like what they can do and what they're trying to do, maybe a good time to get involved. Realistically, I can see this going up. I still get a lot of questions, when crash, when's the market going to crash? I chat to anyone, like, as soon as they find out I'm an analyst, they're like, oh yeah, when's the market crashing? Like, guys. What do you mean, when's crash? Look, look. What do you mean, when crash? Oh, right there. Right there. That's a huge one. That's a huge crash. Down 32%. Huge crash right there. And the fact that a lot of people are still asking that tells me that they're still not ready to buy. General public still not ready to buy. Analyst teams ready to buy. So look, personal bias, bullish. Build your stock portfolio, perfect time to do it. It's nice and cheap. Build one, aim for 10 years. Why not? I think it's a great time to do it. Aussie dollar, Japanese yen, Paul. What time frame are you looking on, my guy? Foreman, how do you handle it when you basically have the same setup on several pairs? Just pick the best. For example, this morning, Aussie dollar, US dollar, and Great British pound, US dollar with the same setup for me. Was there a better option? As you have you have these two setups, right? And if you have the funds to allocate to both, you can allocate to both. Now, obviously, they're going to be correlated a little bit as they're both US dollar wise. But if they're both valid setups according to your system, and they're quite highly valid, they're nice setups, I would go in both. If you're a bit nervous to be double the exposure, then just half your position. So collectively, they'll be equal to one risk. But they looked up so identical. Yeah, right. So they were correlating heavily. Yeah. So essentially, it would have been the same trade, realistically. So there's two ways about it. If you're really confident in the setup, you can go in both. You can go in both. If you're more confident in one than the other, then you can allocate more funds to one position than the other. If they're just both nice setups, then you can go half risk on each one, equating the full risk collectively, and manage it that way. It all depends on how confident you're feeling with the setups. Because if you're really confident in the setups and you've got your edge and you really believe the probability is in your favor, then you can just get in both full risk. But it depends on everything and how that setup goes. Enjoy your Forex earnings. Enjoy my Forex earnings? What do you mean, Emmanuel? Aussie dollar, Japanese yen. I see a head and shoulders on the daily chart. I don't see what you're seeing. Where am I looking? Or are you looking at like the inverted ones here? You looking at that? Interest rates don't seem to be playing much of a part in FX and ML. Otherwise, in Euro, Aussie dollar would be down lower. Should be good carry on trade. Interest rates usually kind of do funny things in the Forex market. Interest rates going up is usually a really good sign for an economy. We're getting to a level now where currencies are kind of like, we don't want to have to keep upping it. We're in dangerous areas, but they're still going to up it because they have to, right? So yeah, it's an interesting one. I wouldn't say they're not playing much of a part. I do think they're probably the biggest driver in the currency market right now. Remember, the outlook for where interest rates are going to go comes out 6 months, 4 months prior. So the actual announcements of the interest rates, it doesn't matter, right? Because it's already factored in. The prices have already moved in accordance to where those interest rates are going to be. We're already at fair value based on those interest rates. And that started 4-5 months ago. It's moved along. The only time that interest rates really send the market crazy is when there's a shock announcement. And I just don't think we're going to get shock announcements realistically. We did get a shock announcement in the way the inflation moved with the US dollar recently, how it didn't get any worse. And you can see the way the market reacted to that. It was a shock announcement, and that's usually what happens. But with these things, you kind of see a correlation effect that's already priced in way before it actually comes out. And it is probably one of the biggest movers of the FX market. It's just, it does it gradually. It's just not doing it in one pump. It does it gradually over weeks and weeks of data. Third great idea, go halvesies. Yep, that's what I would recommend. When you will go on vacation, you will enjoy your forex earnings. No, kind of. Yeah, like yes, but I'm a There's so many ways to say this. I'm gonna go with probably the most universally known is cheapskate. I'm a cheapskate. Um, I try to avoid spending money on all occasions. I really don't. I don't like spending money. Um, I try my best to just not spend money at all, or whatever, wherever it might be. It's just who I am. I just don't like spending ridiculous amounts of money on ridiculous things. I just don't see the point in it. But one thing I will spend money on is a holiday, an experience. They're the nice ones. Go switch off for a little bit, sit on a beach, drink a cocktail, watch some rugby. It is nice. It is nice. Do you trade New York? No, I don't. New York, for me, the New York stock market open time is, I think, 12 a.m. to 1 a.m. for me. I am fast asleep by that point in time. I don't do carry trades. Not very often, woman. Not very often. If ever. Not really something I look to do. Ah, big drink. Big drink, lovely. Your target's 90? Target's 90. What am I not seeing here, Paul? A head and shoulders on the daily, which I'm not seeing. And then your target is back to this line here. So you're looking to short it for a head and shoulders on the daily chart? What am I not seeing? Am I going insane or maybe? Maybe there is a head and shoulders in there that I'm just not adapting to, but I'm not seeing much of a. I can try and find one. If you're looking at head, shoulder, but we broke the shoulder. Look, all for it. If your analysis works, all for it. I'm just trying to come to grips with where your analysis is at and why. You a Springbok fans, Coog? In week. Nah, I'm sorry, Paul, mate. I'm just not sure what you're looking for. If I see anything here, it's an ascending wedge, which usually indicates an upside push. But no, mate, you just give me. Fair enough. I respect it. Bit of sport banter. Fair enough. You're a rugby fan, or you just like winding me out? Where are you from, Coog? I know we've discussed this before. I'm sure we have. I've wanted to say Perth. I don't know why. Is Perth or oh no, maybe it's the US. I'm chatting to someone from Perth. Sorry, I get so many people coming in and out that tend to blur a little bit. Market as a whole, like there's not heaps out there. There's originally from England, now in Wyoming. There we go. There we go. We have spoke about this before. We have spoke about this. Big move. Wyoming. Yeah, so as a whole, things to take away from this week. I'm pretty much done trading. I may do some scalping on the US dollar Japanese yen this afternoon. But I'm not going to be looking to trade anything for NFP. Good man, David. Not going to be looking to trade NFP at all. Solely because I just don't like trading NFP. I think it's too volatile, and I think it just moves too much, too quickly. And sometimes it just doesn't even correlate to the data. You can get data and the market move the other way because you get a lot of profit taking. We have seen a very bullish US dollar all week. I mentioned this earlier, David. We've seen a bullish US dollar all week, which was predicted. And we've got to ask ourselves whether or not that's just bullish because people want to buy the US dollar, or whether or not that is the NFP move. We can ask ourselves that question. But we can actually probably double check through that way in having a look. Can I get session breaks for the weeks? I can't. Never mind, it's going to take too long. Yeah, when we get such bullish moves in the US dollar ahead of big news, the NFP coming out, we've got to ask ourselves whether or not that bullish move was the NFP data reaction and forecast. Therefore, when the data does come out, we're just going to see a lot of profit taking. It is extremely volatile, and big firms, big players, big banks do understand that there is a fantastic opportunity to sell or to buy into very large positions very quickly. So there are a lot of firms that use NFP's volatility to fill or to get out of positions that don't necessarily correlate at all with the data that is announced. That's why sometimes you'll see we might get good data and it start moving up, and then it just have a massive shunt down and then go back up. That massive shunt down, if you've ever watched it quickly on the 1 minute chart, that is a very big player either selling or buying into a position to use the liquidity to their advantage. Because when you're trading millions and millions of dollars on live market, it can be hard to actually get filled in positions. So they use these big events to get filled all within the same area, and not have to spread it out over 7 weeks. So keep an eye on that. If you ever see those big movements, that's what that is. But then as a whole, I don't trade NFP. I don't like to trade NFP. We're expected to remain at 3.5% unemployment rate. The Aussie dollar was expected to do the same. It actually beat expectations and pulled into a 44-year low, which was pretty impressive. Will the US dollar do the same? Don't know. It's very easy to get jobs these days. They call it a job crisis because everyone's so easily just flipping over to another job because there's so many out there at the moment. Can that improve the unemployment rate? Probably. Will it? Let's wait and see. I won't be surprised if we do get a positive reaction. I won't be surprised if we do get a surprise announcement that we do get down into 3.4%. We won't go 3.3 or 3.2. I'll be very, very surprised if we get anywhere down there. But we're expected at 3.5. We're at 3.5 last month. I don't see why not. We can't get to 3.4. I'd favor 3.4 over 3.6. Realistically, it will probably come in at 3.5. Either or, I don't think it's going to move the market without someone else doing it. So the market will move and it will go crazy, but that will be people taking profits or entering big buy positions, not based off of NFP, but rather based off of pre-market analysis or long-term analytics. Unless we have a surprise event. If 3.4 falls in or 3.6 falls in, then you're going to see it go crazy and it will be viable, and you probably get a great opportunity to grab some pips in there. But if it sits at 3.5, you will get the volatility, but it won't be in correlation to the employment rate, in my opinion. That's my NFP thoughts for tonight, David. I hope that gave you some kind of clarity, maybe, or at least shown you where my head's at when it comes down to NFP. Does anyone have any final questions or anything they want to discuss? Because I am getting to time limit. No worries, David. Happy to help. I'm getting the time limit. So if there are any more questions or anything you want to ask or anything like that, fire away. Remember, you don't have me for 2 weeks. I will be accessible on the Discord all of next week. The following week after that, I won't be. So if you do need me or want me at all, Discord all next week, or you can ask me right now. What would you like? What can I do for you? I'll try my best. I'll use all my assets. As I drink my massive water. Great session. Thank you and enjoy your time away. Thank you, Holman. Thank you very much. I will, I am sure. Hopefully. Alrighty. I'll give it a split second in case anyone is typing a question, but if not, then I think we'll call it a day. Cheers, Jordan. Enjoy the rugby. Thanks, Coog, mate. Appreciate it. Alright, guys. Well, there we go. Have a great weekend. You know the drill. You know what I'm going to say. Say it with me. Spend some time with your friends. Spend some time with your family. Get away from the charts. Reset. Come back on Sunday or Monday and attack the markets again. And don't take that lightly. It's not just like a sign-off message I say. I mean that really. Take some time away from the charts over the weekend. Get out of the finance world. Get out of the charts. Get out of the numbers. Go spend some time with some friends, some family, and reset. It does your brain wonders. Get some serotonin. Come back later on and get back into the markets. Trust me, it'll help. All right, guys. Thank you. Thank you very much, Clayton. Thank you, Emmanuel. Cheers, Coog. Enjoy, guys. I will see you in a few weeks. It's going to be a long few weeks. Cheers, guys. Enjoy.